Datavault AI Inc. is currently trading at 1.15 USD, reflecting a significant intraday slide of 11.54% during today's session on Thursday, December 18, 2025. While the broader market sentiment around high-growth tech often mirrors the aggressive rallies seen in Tesla stock or Nvidia stock, the reality for Datavault AI today is a stark contrast to the speculative optimism that usually surrounds AI-driven data monetization. Most investors looking at their screens right now see a double-digit drop and assume this is just another casualty of the volatility inherent in microcap tech. However, the insight you might not have anticipated is that this aggressive sell-off is not purely a reaction to the company's internal operations, but a highly targeted response to the sudden Senate delay of the Clarity Act. This piece of legislation was supposed to provide a definitive regulatory framework for the tokenization of real-world assets, which is the very foundation of this company's 2026 growth projections. Without that legislative green light, the market is pricing in a massive delay for the company's most lucrative contracts, essentially stalling the engine of their revenue guidance just as it was starting to rev up. The common ground here is the belief that anything with AI in its name should be immune to traditional gravity, especially after the explosive performances we've seen with Apple stock this year. But the deeper reality is that Datavault AI is fighting a war on two fronts: regulatory uncertainty in Washington and a severe liquidity crunch that is making institutional investors nervous. While self-investing enthusiasts on various investing sites might see this as a buy-the-dip opportunity, the smart money is looking at the negative net margin exceeding 1,300% and wondering if the company can actually survive long enough to reach its ambitious 2026 goals. The expectation was that recent partnerships, like the one with Triton Geothermal, would provide enough of a cash cushion to bridge the gap. The reality is that these fees are performance-based and tied to the very tokenization projects that are now under a cloud of regulatory doubt. This creates a feedback loop where the stock price drops, making equity financing more expensive, which in turn increases the risk of further dilution for current shareholders. The intraday movement today has been characterized by intense selling pressure right from the opening bell. We saw a brief attempt at a recovery around mid-morning as some retail traders on the Robinhood app tried to defend the 1.25 support level, but that floor was quickly obliterated. Trading volumes have spiked well above the 30-day average, which usually indicates that it isn't just retail panic. Institutional players are likely trimming their positions. When you look at the flow on the Interactive Brokers platform, you can see a clear trend of large block trades hitting the bid, a sign that funds are prioritizing capital preservation over long-term potential in this specific sector. This is a far cry from the steady accumulation we see in Schwab Intelligent Portfolios or more conservative Fidelity investments, where stability is the priority. Instead, DVLT has become a battleground for high-frequency traders and those looking for short-term arbitrage in the wake of news-driven volatility. Despite the carnage today, we have to look at the recent wins to understand why anyone is still holding this. Just a couple of days ago, the company announced that Jeremy Roenick, the hockey legend, joined as an advisor for their international NIL exchange. This was intended to be a major catalyst, positioning the company to dominate the way athletes license their data and image rights globally. The market narrative shifted briefly to sports tech leader, but that sentiment was short-lived once the Weiss ratings reiterated a sell on the stock. This tension between high-profile celebrity endorsements and cold, hard financial ratings is exactly where the stock is stuck. One side sees a world where every athlete's performance data is a tradable asset. The other side sees a company that is spending more on marketing and strategic advisors than it is generating in actual sustainable revenue. This is the kind of situation where investment help is vital, as the complexity of these Web 3.0 business models often masks the underlying fiscal strain. Let's talk about the institutional activity for a moment. We've seen some activity from firms like Anson Funds and Vanguard, who historically maintained positions in these high-risk, high-reward tech plays. However, the recent 13F filings show a subtle shift. While some are adding, others are selling off significant portions of their holdings. This divergence in professional opinion is usually a precursor to even more volatility. If you are using a Fidelity trading platform or a SoFi trading platform to manage your individual brokerage, you've likely noticed that the risk profile for DVLT has moved into the extreme category. The daily swings are no longer just a few cents, they are massive percentages that can wipe out a position in hours. This is why many are moving toward a SoFi robo-advisor or intelligent portfolio approach to mitigate this kind of idiosyncratic risk. Comment below how many shares of Datavault AI Inc. you currently hold and whether you think the Senate will eventually pass the Clarity Act this winter. Your perspective on the ground matters, and it helps everyone get a better sense of the retail sentiment versus the institutional narrative. To understand why the price is behaving this way, you have to look at the business model. Datavault AI isn't just a software company. They are trying to build an entire ecosystem for data valuation. They use their patented data value and data score engines to put a price tag on information that was previously considered intangible. Whether it's genomic data from their Silex partnership or fan engagement data from sports venues, they want to turn that info into a liquid asset. It's a bold vision, similar to how NVIDIA capitalized on the need for processing power. But unlike the giants, Datavault AI is operating on a shoestring budget. Their Q3 revenue grew 148% year-over-year to $2.9 million, which sounds impressive until you realize their EBITDA loss was nearly $30 million for the same period. They're raising their 2025 and 2026 guidance significantly, aiming for over $200 million by 2026, but the market is currently questioning the credibility of those projections given the regulatory hurdles. The history of the stock has been a series of peaks and valleys. Not long ago, it was trading near its 52-week high of over $4, fueled by the excitement of Bitcoin-related investments and the promise of massive licensing deals. But since then, it has been a steady grind lower as the reality of a pre-revenue-style growth company in a high-interest rate environment set in. Even with the Robinhood fractional shares feature making it easy for anyone to jump in, the lack of a clear path to profitability is keeping the stock pinned. The company's Acoustic Science division, featuring WISA technology, was supposed to be the stable revenue generator that funded the more experimental data science side. Instead, it has faced its own challenges with inventory cycles and a slow rollout of new licenses. Looking ahead, there are two possible paths for this stock. The first is the breakout scenario. If the Senate moves forward with the Clarity Act and the company signs just one of those dozens of contract negotiations they've mentioned for RWA tokenization, we could see a squeeze that rivals the best days of any meme stock. The short interest is high enough that any positive news could trigger a massive upward move. The other path is the dilution scenario. If the stock continues to languish near the $1 mark, the company may be forced to do another equity raise, further punishing long-term holders. This is the reality that many who use online investing tools or simple investing sites often overlook when they focus purely on the disruptive nature of the technology. If you are using a Fidelity mobile app or the Robinhood app to track your daily gains, today has been a painful reminder that even the most innovative ideas are subject to the whims of the macro environment. The contrast between the company's optimistic guidance and the market's pessimistic pricing is the ultimate tension point. The management is essentially telling the world that they are on the verge of a multi-hundred-million-dollar revenue explosion, while the stock price is telling the world that they are worried about the company's ability to pay the bills next quarter. This is why you see such a divide between the strong buy analyst ratings and the sell ratings from institutional research houses. It's a classic case of the narrative outrunning the numbers. In summary, the situation with Datavault AI is a perfect example of how the market handles high-risk innovation. Today's 11.54% drop to 1.15 USD is a direct reflection of the fear that the legal framework required for their success is slipping further out of reach. We've seen a massive disconnect between the company's aggressive revenue raises for 2026 and the actual cash on the balance sheet today. The Jeremy Roenick partnership and the Triton geothermal deal are exciting on paper, but they haven't yet translated into the kind of bottom-line stability that would satisfy the users of Interactive Brokers Trading or Fidelity Wealth Management. The expectation was a smooth transition into the world of asset tokenization. The reality is a messy, slow-moving legislative process that is starving the company of the momentum it desperately needs. As we move toward the end of the year, all eyes will be on whether the company can close one of its major pending contracts or if it will be forced to pivot its strategy yet again. The volatility we've seen today is not likely to subside anytime soon, and for those managing their own individual brokerage or using online investing platforms, the message is clear. The gap between vision and execution has never been wider. Whether you are holding